Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host at AlgoBot, and in today's session, we're exploring a strategy called Klinger Volume Trend Shift. This one is built around Stephen Klinger's volume force, a way of measuring the conviction behind price moves by blending direction with volume. Over the next few minutes, you'll learn how this trend-following momentum approach reads volume, how it times its entries with a signal line crossover, and how it manages risk with volatility-based stops. Remember, this is educational content only and not financial advice. Let's dive in. So what exactly does the Klinger Volume Trend Shift Expert Advisor do? At its heart, this is a trend-following momentum strategy. It combines two ideas that work well together, a measure of volume conviction and a filter that keeps the strategy aligned with the broader trend. The engine behind it is the Klinger Volume Oscillator, often shortened to KVO. Most oscillators only study price. The Klinger approach adds a crucial second dimension, which is volume. It builds something called volume force, which asks how much volume is pushing price in its current direction. When price rises on strong volume, the volume force reads as strong positive pressure. When price falls on heavy volume, it reads as strong negative pressure. From that volume force, the strategy calculates a fast-moving average and a slow-moving average, and the difference between them becomes the oscillator. A third, smoother line, the signal line, sits on top as the reference for timing. On top of the oscillator sits a trend filter, which is a simple moving average of price, by default over 50 bars. The strategy only looks for long trades when price is above that average, and only looks for short trades when price is below it. This keeps entries pointed in the direction of the prevailing move rather than fighting it. This expert advisor is designed for liquid instruments where tick volume carries meaning. Think major currency pairs or stock indices, on time frames from 15 minutes up to 1 hour. It suits traders who prefer a swing or trend style, holding positions for a stretch rather than scalping. And because every setting is adjustable, it's a useful teaching tool for understanding how volume, trend, and volatility can be combined. As always, this is for educational purposes only. Let's walk through the mechanics step by step. The expert advisor works on closed bars only. It waits for each primary bar to finish, then updates its calculations. This avoids reacting to the noise of a candle that is still forming. First, for every closed bar, the strategy builds the volume force. It looks at whether the sum of the high, low, and close rose or fell compared with the previous bar to decide direction. It measures the bar's range, tracks a cumulative range within the current trend, and multiplies volume by direction and by a scaled range factor. The result is a single sign number representing the conviction behind that bar. Next, it turns that stream of volume force values into the oscillator. It takes a fast exponential moving average, by default over 34 bars, and subtracts a slow exponential moving average, by default over 55 bars. That difference is the Klinger Volume Oscillator. A 13-period average of the oscillator becomes the signal line. Now for the entries. There are two conditions that must both be true. The first is the trend filter. For a long, price must be trading above its 50-period trend average. For a short, price must be below it. The second condition is the signal line crossover. For a long, the oscillator must cross up through its signal line, showing buying conviction reasserting. For a short, the oscillator must cross down through its signal line, showing selling conviction taking over. When both align, the expert advisor opens a single position. Risk is managed with the average true range. The stop loss is placed a multiple of 8 ER away from entry, by default 1.5 times. The take profit is set as a reward to risk multiple of that stop distance, by default 2 times, so the target sits twice as far away as the stop. Only one position per magic number is held at a time, and a spread guard blocks new entries when trading costs are unusually wide. The ATR-based stop breathes with volatility, widening in fast markets and tightening in calm ones. Every exit is handled automatically by that stop and target. Let's look at the actual MQL5 code that runs inside MetaTrader. At the top are the input parameters. FastPeriod and SlowPeriod set the two moving average lengths of the volume force that form the oscillator, defaulting to 34 and 55. Signal period, defaulting to 13, is the average of the oscillator that becomes the signal line. TrendEmaPeriod, defaulting to 50, is the trend filter. AtrPeriod, AtrStopMult, and TpRewardMult control the volatility stop and the reward to risk target. Max spread points is the spread guard, lots is the order size, and magic tags the trades. Below the inputs, the two crossover flags are computed. Cross-up is true when the oscillator was at or below its signal line on the previous bar and is now above it. Cross-down is the mirror image, previously at or above, now below. Just beneath, the code sets the stop distance as the AtrStopMult times ATR, and the target distance as that stop distance times the reward multiple. Now the long block. If cross-up is true and the close is above the trend average, the expert advisor reads the ask price, places the stop 1 stop distance below entry, sets the take profit 1 target distance above, and calls trade.buy. The short block is the exact opposite. If cross down is true and the close is below the trend average, it reads the bid price, places the stop 1 stop distance above entry, the take profit 1 target distance below, and calls trade.sell. Both sides carry a comment label, so the trades are easy to identify. Notice that the stop and target are calculated the same way for each side, only the direction flips. Now let's bring it all together on a chart. On screen, you can see a series of candles with the trend EMA drawn over them in blue, and below, in the subpanel, the Klinger Volume Oscillator in gold with its signal line in blue, and a -0 line for reference. We'll follow one long trade, and then one short trade, exactly the way the strategy reads them. Start on the left. Price is grinding higher, holding above the blue trend average, so the trend filter is already giving permission to look for longs. In the oscillator panel, notice the gold line dipping down. The third candle shows a small pullback, and the Klinger oscillator slides below its signal line. This is a brief lull in buying conviction, not a reversal. Price is still above the trend average. Watch the fourth candle. Price steps back up and closes higher, and in the panel the gold oscillator crosses up through its signal line. Both conditions are now satisfied. Price is above the trend EMA, and the oscillator has crossed up. That is where you see the buy entry marker appear. The strategy reads this as buying conviction reasserting itself in the direction of the established uptrend. From there, the stop loss is placed below entry at 1.5 times the average true range, and the take profit sits twice that distance above, giving a 2-to-1 reward to risk target. Follow the next candles. Price pushes up steadily, each close building on the last, and the oscillator climbs well above its signal line, confirming momentum. By the seventh candle, price reaches the take profit target, and the long trade closes at its objective. That completes the long example, trend filter, then oscillator crossover, then a managed exit at the reward target. Now the market changes character. Watch the eighth candle. Price stalls near the top and prints a weaker close. On the following candle, it slides back down and crosses below the blue trend average. The trend filter has now flipped, so the strategy will only consider shorts. In the oscillator panel, the gold line rolls over from its highs. Look at the 10th candle. Price closes firmly below the trend average, and in the panel the oscillator crosses down through its signal line. Both short conditions now line up, price below the trend EMA, and a downward crossover in the oscillator. That is where the sell entry marker appears. The strategy reads this as selling conviction taking control just as the trend turns down. For the short, the logic mirrors the long exactly. The stop loss goes above entry at 1.5 times ATR, and the take profit sits twice that distance below, again a 2-to-1 target. From there, price works lower, candle after candle, closing near its lows while the oscillator stays beneath its signal line. By the final candles, price reaches the take profit target below, and the short trade closes at its objective. Notice what the chart teaches. The oscillator is not being used as an overbought or oversold gauge. There are no fixed extremes here. Instead, it's the relationship between the gold oscillator and its signal line that matters, and the zero line is only a reference. The trend average decides which direction is allowed, and the crossover decides the moment. When conviction, measured through volume, flips in the direction the trend already favors, the strategy acts, and then it steps aside and lets the volatility base stop and the reward target do the rest. Of course, not every signal in real trading reaches its target. Some reach the stop instead, and losses are a normal part of any strategy. This illustration simply shows the logic working as designed. That brings us to the end of our breakdown of the Klinger Volume Trend Shift Expert Advisor. Today we covered how the strategy builds Stephen Klinger's volume force, how it forms the Klinger Volume Oscillator and its signal line, how the trend average filters direction, and how the signal line crossover times entries, all managed with an average true range stop and a reward to risk target. Remember, everything here is educational information only, and nothing in this video is financial advice or a recommendation to trade. Trading carries real risk, and losses do happen. If you found this helpful, please like the video, leave a comment with the strategy you'd like us to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.